Alpha Fam, Coach Jam here with another market update. Before we begin, I do want to say that nothing in these videos is financial advice. Everything's for educational purposes only. It's just my own analysis on the market. Also, if you're new to the Alpha Syndicate channel, if you could please give us a like, comment, and a subscribe. We really do appreciate the support. So let's get in the market, guys. So we've had a bit of a move last night, and it was crazy because when it happened was right before the State of the Union address, which was when Trump talked. This was very interesting to see this happen, actually. And then there's also something else that people are starting to try to correlate with this. And it was crazy because yesterday morning was actually the first morning that we got where we didn't get this super dump in the morning, all right? And people are trying to say that this is because of Jane Street. So what Jane Street is a market maker, guys. All right, this is a TradFi market maker that is just now starting to become incorporating with digital assets. So they right now command roughly a fifth of the global trading revenue alongside rivals like Citadel and these other massive market makers. All right, what they're trying to put the correlation with, and I just found this out as well, is Jane Street actually is getting sued by Terra Luna for insider trading and being the reason why Terra Luna crashed back last cycle. All right. So people are starting to basically connect the dots that a lot of this manipulation has been occurring, and they're trying to blame it on Jane Street. Now, this hasn't been confirmed yet. All right. This is still a lot of speculation, but this is a very interesting dynamic because we're also seeing that the market is no longer turbo dumping. We're actually getting a move up. All right, so this is just kind of coincidental as far as the timing is concerned. All right, looking at the 4 hour, things are looking pretty good. I'm even a little bit surprised, and I've been saying it. I said we need to start showing some strength. All right, because if we don't, what's going to occur is we are going to roll over and potentially go down further unless we start showing some strength. So you can see we are right now just about back up to the 50-day on the 4 hour battling. You can see how we rejected off of it. We're right here. Last time we've even come anything remotely close to the 4 hour, we rejected hard right here, and then we popped over it and then immediately dumped back down. So we want to see the reaction. What we would like to see is this. We want to see us hold above. We want to see us definitely make a higher high right here. All right, so we can have a complete break of structure from what this, because these are making lower lows and lower highs. You can see it. All right, and then from there, we want to break that structure. We want to come back down. We want to retest because then the 50 will start coming up, retest it as support, and then start making some type of recovery. All right, guys? Because if not, then what will happen is most likely we're going to come into this general area. We'll come up, reject, and then we will come back down further. All right. Very, very interested to see today's U.S. Open. Again, we always like to look at futures. You always hear me talk about it. I always like to look at futures to give me an idea of where I think the market's going to go. You can see this is S&P 500, the mini. You can see that it's back above on the 4 hour, above the 50, and you can see it reclaimed it also on the daily. This is important because we reclaimed it here. The next day we dumped. That we just immediately dumped that Monday, and today is also Wednesday, guys. All right, and it's not just a magical day of the week or nothing like that, but just based upon the days of the week, Wednesdays are the most bullish days of the week as well. All right, so it would be nice to see a continuation throughout the next couple of days. But we can see that we're back above the 50 on here. We can see the NASDAQ. We need to got a little bit more work, but if today continues to move like we have done so far, there's a good chance that this can reclaim it. And then we have the S&P 500, which is right above the 50. It got right above it yesterday. So I'm very interested to see how this kind of plays out. And I've been talking about it, guys. We need to start showing strength right here. We need to. If not, and this is something that would be devastating to the crypto market, is a broader stock market correction. All right, if this starts to become a distro and this thing starts to can't reclaim or start making higher highs and then starts to roll over, that's not going to be good for crypto because crypto will then dump with it. All right, guys, so just keep that in the back of your minds. All right, now a couple of other things that are going to be coming out I'm really interested on is next week we get the next ISM reading. So let me show you right here. This is all the data that we've got coming out in the next week or so. So we have, let me click on it. So that was last night, was the State of the Union address. We have PPI month over month, which is tomorrow. No, on the 27th. And then we have on the 2nd, ISM manufacturing PMI. That was the last time we had it. It went up to 52.6. This would be very bullish for the markets for this thing to continue going up. All right. If this thing can continue going up, and let's say it doesn't have to go up 10% like it did last time, but just generally speaking, a continuation going up, I think this is also going to bring a lot more certainty back into the market because people are correlating these different macro events, guys. They're correlating this data, all right? There's a lot of people that are starting to understand that the ISM has a massive impact on the market, especially when this thing starts to trend over 50 and we're well above it. So if this thing continues to go up, I think it's going to be a net positive for the market. All right, guys. Something else that's been kind of funny is Bitcoin dominance, guys. This thing has been falling off a cliff, just falling off a cliff. And we're seeing a massive outperformance in alts compared to Bitcoin. One reason for that is I think alts, obviously, because they are down the risk curve, they are the farthest down. They're the most riskiest of risk-on assets. So people are naturally going to de-risk from these first and de-leverage from these first. So I think a lot of the trades from the alts have already unwound, and that's why we're seeing when Bitcoin goes down, it's going down more than alts, which is making Bitcoin dominance drop. All right. You can see on the weekly, this thing is just 4 weeks in a row just moving down, guys, after we rejected off this bearish retest on the 50. All right. This is looking pretty good to me, guys. And I don't see a lot of people actually talking about this type of stuff. It's kind of crazy how the market is right now. Everybody is so hyper fixated on all the negative that they're completely disregarding all of the bullish stuff, all of the bullish macro data and all of the different things that are actually good. People are completely ignoring it, and they're just running with these different other narratives like, the Jane Street FUD and the quantum computing FUD and like anything negative they're really attaching to, and they're like completely ignoring all of the really good things. It's kind of interesting, guys. It just shows what kind of dynamic that we're in. So something else that I want to look at too, guys, that we want to kind of monitor, which is USDT dominance. All right. It's had a pretty big move down today. If you look on the 4-hour, we have finally cracked back below this. We are well in bear market territory. There's absolutely no denying that we are in a bear market, guys. I mean, this is something that we have to come to terms with. We're not in just a broader correction, the way that this market has moved from October 10th to right now, you would have to conclude that we are in a bear market. And very interesting is these bear markets, and I've said it before, we're right at the point where these things typically start to bottom. All right, guys? So when these things bottom and start to actually create these bottoming patterns, you're going to start seeing some of these things flip. All right. So the big thing right here and seeing this thing actually get back below the 50, guys, as you can see, this thing's been on an absolute uptrend. The only time that we've come back below the 50 was right around this period right here, and then we immediately pop back above it. All right. What we really need to see is this thing start making a downward trend. All right, which is breaking this structure that it's been in, which is making higher highs and higher lows, and start making and creating a bearish structure, which the first thing would be, definitely closing below this level, retesting it as resistance, and then starting to move down. All right. That's what we want to see with this. And then again, this thing is at a major area of resistance. I mean, you can see last bear market when this thing came into this general zone. I mean, yes, it did chop there for a bit of time. And if you look at this, guys, and you look at how long we were in this general zone for, 500 days. All right. So 500 days, that's a very, very long time, and I don't expect us to go through an extended bear market, because you have to think 2021 in the macro setting and everything that was going on coming off the back of 2021 going into 2022 compared to now is completely comparing apples and oranges. It's not the same market. You have to understand that we were coming out of COVID, the largest, basically the most aggressive money printing in human history happened during that period of time, caused hyperinflation to happen during that time, which made them have to go through the largest interest rate hike in human history, and that took a very long time to shake out of. All right, and I think a lot of people have to understand that these things, when you go through one of those type of situations, they take years to recover, guys. And I think that's why this whole 4-year cycle thing has really screwed a lot of people up, because people have been so hyper fixated on this 4-year cycle theory that they've been completely ignoring the fact that we've never really been in another environment where a bull run actually happens. Yeah, we've had some outperformance, and Bitcoin's, gone from like 16,000 to 126,000. It's definitely had its own like mini bull run, but broader crypto market, other than very small pockets of outperformance, has really not done that much. And the reason why is the liquidity conditions and the macro conditions that have driven every single cycle that we've had from 13, 17, 13, 17, 21 till now. We're just now actually starting to get that environment again. We haven't had it the entire time. Seriously, guys, we have not had it. So with that being said, I like to also take a look at a couple of other things. One big one right now is I like to look at Ethereum versus Bitcoin, all right? And it just gives me a general idea of what's going on with alts, because we want Ethereum to outperform Bitcoin because we understand how the liquidity rotates, all right? So what this looks like to me is this thing actually broke out of this massive bear flag, and then when it did its breakout, it kind of went into this range, and then it's come back down and basically have retested the top of this channel and is starting to form a bottoming pattern where it's starting to move back up. If you go on the 4 hour, you can see it's reclaimed the 50. It hasn't done that since it's made this initial drop down, which is pretty bullish. You can see it did reclaim it very quickly, but then lost it immediately. So this is something that I'm going to be watching because I want us to see us hold this level. We want to continue moving up, all right? What we don't want is a fake out, which is us make this aggressive move up over the next couple of days, and then it immediately gets sold off, all right? And that's the worst thing about these zones, guys, and this is the reason why a lot of times these accumulation zones really chop people up, because everybody gets super excited when market starts to trend up, and then what ends up happening is these things get to their major areas of resistance, and they just can't push through, and they come back down. And then that motion of going up and down, up and down, up and down over an extended period of time really drives people crazy, and that's where you get time capitulation and people just straight up selling and just removing themselves from the market. All right, guys, you don't want to do that. All right, this is a very unique opportunity, and I think a lot of people are not really focused on it or paying attention to it until it's too late. And that's just how these things work out, guys. That's why you have people like Warren Buffett say, be greedy when others are fearful, be fearful when others are greedy. There's a reason that he says these things, guys. All right. So with that being said, and again, guys, if this is the first time you've ever come across one of my videos, my name's Coach JM. I've been a digital asset investor going on 5 years now. I am the founder of Alpha Syndicate, and I also host all of the Crypto Talk workshops inside of Capital Club. And if you want to understand and learn this stuff, guys, with us, how we connect the macro, the fundamentals, the technical analysis, and how we combine it all together to give us an edge over the market. If you're also looking for a place where you can get coached and mentored in not just digital assets, but business development, have a place to network with other entrepreneurs and traders and investors, click the link below, guys. We'll see you inside.